Good afternoon. This is the market update for Tuesday, June 18th. And last video this weekend, we had just come off Friday's session. The doom and gloomers were out. The end of the world was upon us. And sure enough, the reason for the chatter, of course, was the Fed is done, etc., etc. And over the last 2 days, we've seen the Dow gain a nice 100 or 250 plus points. Very, very nice breakouts across the charts. Now, if we, just like we did last month, if we step back and take a look at the charts right now and ignore all the noise that's out there and all the events that is upcoming, let's see where we stand. We've got a symmetrical triangle breakout on the Dow on heavy volume. As you can see, that sell-off that we had over the last few days on lower volume. We are about to get a positive MACD cross. The last two times, actually last 1, 2, 3 times, I could go back further, that we've had a positive MACD cross on the Dow, we have seen decent upside of 100 to 300 points over the next week or two. We've got RSI breaking up through 50. We've got stochastics breaking up through 50. Looks great. Let's look at our leader index. Dow Transports. RSI is above 50. We broke the triangle today. We are about to get a positive MACD cross. The last two positive MACD cross have seen significant upside moves on the Dow Transports when we saw the cross. We've got stochastics up through 50. Looks great. Let's look at the other index. Russell, symmetrical triangle breakout. Positive MACD cross. Last positive MACD cross we saw, actually the last two crosses we've seen on this one, we saw, 50-point upside move each time on the positive cross. RSI up through 50. Positive MACD cross should hit tomorrow. We are about to break all-time highs on the Russell. So where do we stand? What is tomorrow? Tomorrow is Fed Day. This is where Bernanke comes out and hopefully, and I believe he will, clarify all the bullshit that has been floating around over the last couple of weeks that have resulted in the market selling off regarding the Fed being done, the Fed tapering, interest rates going up, etc., etc. I expect some clarity from him tomorrow, and that clarity should result in an upside move in the market. Now, quick mention, when we went over the video on the weekend, you recall I'd mentioned this fantastic little indicator that's working great right now, the put-call ratio. And what happened a couple of days ago going into the weekend? Put-call ratio was again over that magic 115/120 area, and what has resulted again, 200-plus up-point move. If I actually go back and look at the videos, I believe these last four moves over the 115 level have given a 150 to 200 point rally within a day or two. So just a great indicator for us right now. And we also have oil about to go on a big move. We've got a big 6-month breakout on oil. But what we're probably going to be waiting for the oil plays to really wake up would be a break through that $100 level. And it is pretty overbought here at the moment. Now, back to the Fed. Yesterday, if we look at the 15-minute chart, you can see we had a very nice move yesterday, and then whoosh, down the market went, lost about 90 points within 30, 40 minutes or so. And the reason for that was another one of those quotation mark experts. They call themselves Fed watchers. And what a Fed watcher is a journalist whose job it is to drive eyeballs to their crappy magazine or crappy article to talk about controversial issues, to get the markets moving so that the sheep will move where the powers that be want them to move. And yesterday we had some Fed watcher from the Financial Times come out and say, yeah, the Fed's done. The Fed's going to taper. And the market sold off. They swooshed away all the stops. We gave up about 90 points. Once they'd done taking all the stops, back up we went. 40, 50 point pop after that, and then another 150 plus points today. As I've continued to say over the course of this year, ignore the noise that's out there. This is a buy the dips market. Bernanke is the market's friend, and we're, been talking about it really over the last few weeks. But, as this market rally continues to extend, we're going to get closer and closer to that inflection point where all those clowns on the sidelines going, yeah, the market's going to tank, all those shorts who keep shorting all these upside moves, there is going to be an inflection point pretty soon, I believe, where they're going to go, shit, I'm missing this. Time to jump in. And then the mother of rallies begins. We haven't seen anything yet, is my opinion. Now, tomorrow is Fed Day. Fed Day can be crazy. Fed Day can be down big. Fed Day can be flat. Fed Day can be up big. How's that for a prediction? But, can be very, very bizarre trading. Typically, we see some upside movement. Now, if Bernanke comes out tomorrow and says, and reiterates that the interest rates are not going up, and they're not, but comes out and reiterates that interest rates are not going up for a while, and says that the Fed is going to continue to look to possibly taper if the economy grows, we are off to the races. And, that's all we're going to say on that point. We've been seeing a lot of small cap spec money start to flow in, and I believe that is the next big phase in the market. The large caps have had a fantastic time of it this year. The small caps, the micro caps, they're about to have their turn in the sun. Now, not to say with the Russell at all-time highs that the small caps haven't been doing great, but this has been the large cap, small caps that have been leading. The money is going to start to flow down, and that is going to be very, very nice. But anyway, let us jump into some stock plays. Now, one of the stocks we jumped into today, ATHX, something that's been happening over the last day or two. Nice chart setups are going boom! And ATHX, trading alert on this one today. As you can see, we've got a very nice little triangle breakout today. Popped all the way up as high as $1.77. Got a little bit of a dip into the close right at the 20-day exponential. 190 is the target. Stops on this one right now. 164, 165, and you can see something similar to what we've been talking about on the Dow and transportation and Russell Index positive MACD crosses. Last time we got a positive MACD cross on this stock was right before it went on that huge move back there in late March into early April. And something you'll notice if you've been paying attention to charts over the years, things move in phases. And when we've had the kind of market that we've had over the last couple of weeks, a lot of chop, a lot of retracing, you start to see a lot of positive MACD crosses and a lot of spikes on those crosses. So it's something to just keep an eye on over the next few days. But a very, very nice setup on this one. DCTH monster mover for us over the last few days. Hit our 60 cents first target, and since then, over the last 2 days, it's come back down. But something you'll have noticed recently, I mentioned it in the chat room as well, we've been seeing a lot of these stocks that spike. They spike, retrace for a couple of days, then spike again, retrace, spike again. It's stair-step action. Very, very bullish. Definitely a very nice add on this stock around the 8-day moving average, which is around 45 cents. Pick some shares up there today. 50 cents break is where they'll really start to chase this one. And then, that 50-day moving average is still calling up there at the 75 to 80 cent area. Now, another one that has been doing that classic stair-step move is Plug over the last month. Up, 200%? Flag, break, flag, break, flag. We're right at that area where it's about to break again. You can see that 20-day exponential has just held rock solid. Stock was able to hold 40 yet again. Very, very bullish. This one has come back on lower volume. As you can see, the spikes happen on big volume. Retrace on lower. Spike on big, retrace lower. I think tomorrow should be a very nice day on this stock. You'll start to get the chasers in on a 45-cent break, and we could see this one back at 50 cents plus very, very quickly this week. New alert as well today, BPAX. We were seeing a lot of the $1 area biotech stocks really go boom today. We had ATHX, CYTK, big move on that one over the last couple of days. CLSN, we'll actually look at that chart in a minute. Very nice little pop. BPAX, they're merging with a very nice private company. The shareholder vote is tomorrow. As you can see, this one has been ranging back and forth between the 123 to 130 level. Should be a nice little break on this one. If it had been a little bit earlier in the day, the stock probably would have gone boom. 120 or 130 break tomorrow, we could see a nice little move back up to that 145 area. We saw a lot of the penny stocks blow up. In chat, we were playing NEWL yesterday. 15 cents, 100% move. PGRX was one that we jumped into today in the chat room. 16, 17, 18 cent area. Traded as high as what? 28, 29, 50% move. So with that in mind, we're picking up some of these other ones. FFI, they've got a merger vote coming on Thursday. Popped nicely on decent volume today. Got halted right at that 50 and 200-day moving average at 20 cents. So a push through this 20 cent area, 25, 30 cents is very possible. The other little penny play down there is CHGS. 20 cent break sets this one free. So we're starting to see that money flow to the microcap stocks. Very, very bullish if you ask me. And again, one of the positives of this market has been we don't have to sit in a whole lot of swing plays. They go for a couple of days at a time. You move on to the next one. You don't really have to swing. There's a lot of intraday momentum as well. So stepping back, if we did not have the Fed meeting tomorrow, I would say these markets were locked and loaded for a very nice move over the next couple of weeks. Now, with that being said, the Fed, I hope, fingers crossed, comes out and gives us some very nice market-friendly news. I hope Bernanke comes out tomorrow and says, you moron, quotation mark, Fed watchers, you've got it wrong. We're not tapering for a while until the economy gets better. I mean, these guys talking about tapering, we're not even pushing 2% GDP growth. Unemployment is still high. We are, as the analogy I've used before is, we are driving up an almost vertical hill. We're about 30% way up the hill. We're not going to take our foot off the gas because we'll fall all the way back to the bottom of the hill. Bernanke has proved that he is willing to pump the liquidity, and hopefully tomorrow we get that note from him. So that's it for the video. Any questions, shoot me an email, feedback@buysellshort.com. Have a great afternoon and evening, and see you all tomorrow. Bye.